The market seems to be hitting new all-time highs, which may have you wondering if now is a good time to invest. Or is it a case of what goes up must come down? We're going to get some advice from the head of Safe Harbor Retirement. And Corey Sickles with Safe Harbor here to talk about all the options. Corey, so good to have you back.
Glad to be back, Robin.
All right, so we're going to talk about the market and something you offer specifically to your clients called the buffered index. So layman's term, tell us what that is.
Well, one of the things that we do is we have a partnership or a strategic partnership with Gradient Investments. And we put, they manage a lot of our clients' portfolios. And one of the things they're able to do is what we call the buffered index. And if you really think about it, everybody wants to invest in the market. But some of the things that people worry about, especially when the markets right now is at an all-time high, is it going to drop? So what the buffered index allows you to do is invest in the market like the S&P 500 or the Dow Jones, but have protection on the downside, if the market does drop. And again, I just want to make sure all our viewers out there understand that this is not an annuity. It is actual investment, and it does have liquidity.
And so is this kind of like, I read it was described as almost like a shock absorber, right? Of not being at that like extreme risk of all the loss. So then is this something maybe somebody closer to retirement would be best suited for, or at least, maybe even in retirement?
Well, I firmly believe in this. If you're definitely invested in the market, and let's just say you're not 100% stocks, which is very few people really are, right? This gives you the opportunity to invest in the market, but have downside protection. So let's just say, I'll use this as an example. Let's just say you're 60% stocks, 40% bonds. Well, if the market goes up 20%, you're probably going to make somewhere between 10 to 13% just because of that. Wouldn't it be nice to possibly make 12 to 14%, but have a 10 or 15% protection if the market does drop? And that's exactly what this does for a client.
Okay, that makes a lot of sense, Okay, so if we talk about another term here called a structured note, how does this benefit someone investing in this product?
So first of all, we have different offerings every month. So, we're going to have at least, 12 of these. We do these every month for clients to buy into. And one of the things Gradient Investment does is they go out and they negotiate with a financial institution like a Goldman Sachs or a Barclays, right? So they are the backer of what the terms are. So that's kind of important to be able to make sure you understand that. So it is backed by a corporate grade financial firm, but part of that term is you get to invest like in the S&P 500 or the Dow Jones, and you know that when you actually sign up. And it's also, so it is linked to an index. You can lose money, if of course you're invested in the market, and you keep it in there for a period of time. 12 months or 18 months. Again, we have different terms based upon what we're really trying to accomplish for the client.
So then you mentioned it does change as far as the monthly offerings. So give us some examples of what people can invest in right now.
Yeah, we have two monthly offerings right now. We have one where you invest in the S&P 500. It has a cap of 14.75%, which means that's the most that you can make. So if the market goes up 5%, you make 5. If it goes up 20%, you only make 14.75. But it also has a buffer of 15%. So if the market would drop, for example, up to 15%, you lose nothing. So let's just go the other side. Say it drops 20, then the first 15 is on the house. So you do lose 5%. We also have a more conservative option, which has a 20% buffer. Of course, your cap's going to be lower, which is about 7.75. But again, if the market drops up to 20%, you don't lose anything. If it drops 25, for example, on the graph, then it's going to, of course, you're going to lose 5%. So we have the ability for, if you want to have a little bit more risk, a little higher returns, or if you want to be a little bit safer, you're going to, you have a higher buffer with a little bit lower risk or lower returns.
Okay, so there are options. If someone wants to learn more, how should they go about doing that, Corey?
Give us a call, 614-760-0670, or just visit our website at safeharboroh.com. I'm here to make sure you understand it, explain it to you, but I think it's a good offering that everyone should kind of have in their little tool bag with investing in the market.
And there's really no risk to sit down, to have that conversation, to get started and see where you're going. Corey has an office in Easton and in Dublin. You can reach out anytime, as he said. So thanks so much, Corey, for joining us.
Thank you, Robin.